Hi, I'm Veronica Bedon, Senior Advisor for Diversity, Equity, and Inclusion at AARP. I will be your host today, and I'm dog sitting, so if you hear a little bark, please forgive my friend Bella. This is a Facebook series on Social Security, a special effort to reach out to future beneficiaries, like myself, hopefully. This series will explain the Social Security program and also encourage us to learn more about how Social Security works. Most importantly, future beneficiaries must stay engaged in conversations and debates about the security of the program and its long-term solvency. I joined the launch of this series and would like to once again congratulate AARP Arizona and our guests today for doing this important outreach. The topic today is Social Security, vested for benefits. We have two guests today, Alex Juarez and David Parra, both from the Arizona State Office. Welcome, gentlemen.
Thank you. Our pleasure.
Thank you.
After launching this series, AARP Arizona held two conversations on Social Security with a group of future beneficiaries. Alex, one of the goals of this effort is to learn and glean input from future beneficiaries. What have we learned so far?
Thank you, Veronica. Yes, the main objective of this Social Security series is to share the information about the program, but more importantly, to engage future beneficiaries, particularly those in their 30s, 40s, and 50s. And using 13 questions, we have conversed with approximately 5 people so far, mostly millennials. And here's what we have learned. On question number 1, most give themselves a 7 out of 10 in their knowledge of the program. So that's pretty good. Question number 2, only 2 out of 5 knew how much they contribute to Social Security, which is approximately 6.2% matched by employer. Question 3, 3 out of 5 are receiving their Social Security statements, and 3 have created an account at socialsecurity.gov to keep track of their own years worked, credits, and wages. Very good. Question number 4, all 5 people have family members and or friends on Social Security. Question 5, 2 out of 5 have income from other sources, but all but 1 are just making it. Question 6, all but 1 said that they can spot missed opportunities for retirement planning in the experience of their family members and friends. Question 7, it was encouraging to see that all 5 are thinking and planning for retirement and see Social Security as part of their planning, though they expressed being familiar with the thought of that Social Security is not going to be there for them. Question 8 and 9, all have or are planning to have other sources of retirement income, such as 401ks, IRAs, Roth IRAs, real estate, etc. That's great news. Question 10, most knew the earliest age they can collect Social Security, which we know it's 62. Question 11, this question addressed the future of Social Security. All are familiar with what many are saying, that Social Security will be there for their generation. Fortunately, they show some trust in the future of the Social Security program. Question 12, on this question, they provided input on what arguments could work to attract their peers. One was using the fact that they are already paying for it. More education on Social Security, especially early on. Having employers offer more retirement information. Social media was a no-brainer as a key vehicle to reach younger audiences. And finally, question 13, all agree that it is worth advocating for Social Security to make sure it gets strengthened and solvent for years to come. Overall, we got excellent input, and we will be hosting more of these conversations, including some in Spanish in the near future.
That's great. I just learned something. I didn't know that the age was 62. So thank you, Alex. This is very valuable information. Now, I would like to ask David to help us understand how one vests for Social Security benefits and when a person can apply for them.
Thank you, Veronica. I like the word vested because we use it like at AARP, we have pension and you have to wait 5 years, right, to get vested. I still remember when on my 5th year, I said, yes, I am entitled to a pension because I've been vested after being with ARP for 5 years. Well, Social Security has a similar concept, and I would like to just kind of review a few of the details. First, let's remember that Social Security it's not just retirement, but it's retirement disability, survivors, Medicare, and supplemental security income known as SSI. These are the five main benefits of Social Security. And in terms of beneficiaries, the breadwinners or the person who contributes to the program can be eligible for benefits, spouses, ex-spouses, children, and parents. So this is, I love actually Social Security. I've been speaking on Social Security forever, and I am so passionate about this program because I've seen the full scope of what it can do, and also real cases of people who benefit from Social Security and their families. You don't need to convince me that this is a great program. I've done lots of outreach of. It must be about over 10 years. So I am very passionate about this outreach effort. Let's also remember that, as we said earlier, 6.2% is what we contribute. So 6.2 cents out of every dollar goes to the Social Security Trust Fund. And this is matched by the employer. And self-employed pay both. I don't know if you knew this, but self-employed paid both the 6.2, and not only that, but it's 1.45% for Medicare, and also matched by the employer. And I have to also mention that the Social Security tax, unlike the Medicare tax or contribution, is capped. Only Social Security caps the contributions to 142,000, 142,800 in 2021. This changes every year. So after this amount, you stop paying Social Security tax. This is an important point because later on we're going to address some issue where this is going to be even more relevant. This is another point that is it goes along with our contributions. So for every quarter that you make at least $1,360, you get one credit or one quarter. So in 1 year, you accrue 4. In 10 years, you accrued 40. And this is the magic number. 40 credits is what you need to be vested. There's the word again. 40 credits in 10 years. They don't need to be consecutive. And then you are vested. All you have to do is wait for the proper or the right age, which we'll get to it in just a bit. Another concept that is very important to understand is primary insurance amount, PIA. What this is, as we work, Social Security has our records, right? And that's why they send us a statement, or we can go to socialsecurity.gov and create an account so that we can keep track of the years and the wages that we are earning per year. And based on that trajectory, Social Security projects an amount that we are going to be receiving at our full retirement age. Well, that amount is called a primary insurance amount. So that amount, once we apply for benefits, then they're going to apply a specific percentage to that PIA. If it's full retirement, it's a percentage. If it's early retirement, it's a percentage of that amount. If it's spouse benefit, etc. So this is a very key point, though not many people talk about it, but I'll leave it at that. So benefits are calculated as percentages of PIA, and percentages vary depending on who the claimant is and the time the benefits are claimed. So I'll leave it at that and move on to this other concept that is very important. There is a concept that people that we retire at 62. Others think it's at 65. The first is called early retirement, and we'll get to that in just a bit. But this chart I value very much because we all have a specific full retirement age. That is the age at which we get 100% of our benefits based on that table. So depending on the year that you are born, that is your full retirement age. I was born in 65, so if I'm reading this right, if my glasses don't fail, my full retirement age is 67, right? Because anybody born from 60 and later, the full retirement age is 67. So depending on what year you were born, that's your full retirement age. And it is important because at that age, you get 100% of your projected benefit. And let me just say, for those that don't think Social Security is important, the average benefit is $1,500, and the top benefit has exceeded $3,000. So you think about that. If you don't think $3,000 at your retirement is not good money, I don't know what you're thinking, but I think it is, right? So this is a very important program, and this is only retirement. Remember, we also said that it has at least 4 others. Let me move on. So a lot of people retire early. This is called, again, early retirement. As early as 62, you have to have those 40 credits. If not, you cannot get them, and then the 62. There are elements here about spousal benefits. So a spouse that didn't accrue the credits by virtue of being married to or being married or having been married for 10 years to someone who accrued the credits, you also become eligible, but your benefits, the percentage will not be the same. So let's keep that in mind as the one who contributed. Let me cover this a little faster because we don't want this video to be too long. And this is an example of somebody was going to get $1,000. They get early retirement. They will get about $750. If a spouse was going to get $500 at full retirement age, they're going to get $375 if they claim it early. So these are the differences. So it's a lot of money, and remember, this is a monthly reduction, so it adds up as the years go by. Then there's also benefits reduction. So if you retire early and you want to keep working, you got to watch out, because if you make more than $18,960 a year, they will deduct from your Social Security benefit $1 for every 2 earned in excess of that limit. That is very, very important. And then at your full retirement age, the amount is raised from 19 to 50,000, and the reduction is now 1 out of every 2, but 1 out of every 3 that you exceed. So I'll leave it at that. The month of full retirement age, the limit is eliminated. Then, of course, if you retire at full retirement age, and we already covered that, then you get 100% of your benefit, and the spousal benefit at full retirement age is up to 50% if claimed at his or her full retirement age. So remember, full retirement age is a key concept. And I think that next one should be the last. Delaying retirement. A lot of people don't know that they can delay their retirement. And after 67, if you delayed it up to 70, it will increase 8% per year that you delay. After 70, it does not go up. So if you delay it, it makes sense to not delay it after 70. So this is it. I'll stop here, but this is just how we get vested and the different ages at which we can claim benefits. It'll make a difference. So we have to be informed and make the best decision for us and our family. This is it for me.
I appreciate this information so much, especially the ages and looking at the different information that we need to know in terms of if we want to go back to work, how much we can earn, or what happens if we earn more than a certain amount. All of this information is so critical. I've learned so much today. So thank you, Alex, and thank you, David.
Of course.
Our pleasure.
Well, we've come to the end of today's show, and before we sign off, allow me to ask you to join our Facebook group. Our efforts consist of these 3 bullet points here. If we take a look, the efforts of this group will be to contribute to a better understanding of Social Security, to protect those most in need, those most reliant on Social Security, and who would have trouble postponing retirement, and also to achieve Social Security's long-term security and solvency. So join our Facebook group. The name of the group is Social Security. Will it be there for me? And I invite you to join the discussion, and why not, the debate on this important issue. I hope you find this information as helpful as I did. Please continue to join this Facebook series on Social Security and help us spread the word. Take good care.